we structured the deal with us, my dad and I, getting a $5 million first mortgage, $1 million mortgage on this farm. And one of the sellers carried a $2 million second. I had to get my family involved. My siblings all had to come look at it. I had to get them to approve and accept it, because if I went under, so did my dad's farm. I bet the farm.
From cornfields to high-rises, office to industrial, houses to hotels, and every other asset class in real estate, we cover the people, the projects, and the profit. Welcome to the Investing in Iowa show. This show is for go-doers, action takers, and business owners. It's for people like you who are sick of Uncle Sam taking a huge bite of your apple. If you're looking to get ahead of what's taking place in Iowa, learn who is doing what, and how you can get in on the action, you're in the right place. Hosted by Neil Timmins, an Iowa native who has been involved in over $300 million in real estate right here in Iowa. Recording in studio from West Des Moines. Here's your host, Neil Timmins.
I've got Tim Schutte here on the show. Tim, welcome.
Thank you much.
I'm excited you're here. For the audience's sake, who are you? Where are you from? What do you do?
I am a real estate broker here in Urbandale, own Exit Realty, an associate's office. We have about 15 agents that work for us. Grew up in northwest Iowa, little town of Ocheedens, 25 miles west of Okoboji.
Okay.
Grew up on a farm there. Did lots of farm labor at a young age. My dad still farms up there. My mom's up there. I'm the middle of
Where do you fall in
I'm the middle of the five. I'm the youngest boy. There's two girls after me and a girl and a boy above me. We probably are all pretty successful. I always joke that I was the stupid one in the family because the rest of them were top 5 of the class, I think. And I was generally 50%, maybe 60% of it.
I won't dare ask how many people in the graduating class.
100.
All right. What was bigger than that? How did it? Yeah.
I went to Western Christian up there.
Oh, okay. Yeah.
My grade school had 5 kids in it.
Yeah.
4 kids. 4 or 5 kids.
Yeah. See, you were in top 5 in grade school.
For sure. Easy math.
All right. So you graduate high school, and what do you do?
Ended up going to Dordt College for a year and a half because I had to. I was involved in politics some growing up, kind of thought I'd go in the law route. Got my driver's license pulled away from me, so I had to go to Dordt because the family was close.
Yeah.
I had a brother working there and a sister going there.
I needed a ride.
I needed rides. Mm-hmm. And it is meant to happen that way. Grounded me a little better.
Sure.
Kept me out of more trouble than I probably would have gotten into before. And then I think I was a freshman, and my uncle calls me and says, "Hey, get your real estate license. Come help me this summer." And I'm like, "Do I need a driver's license?" He's like, "Yeah." I'm like, "Well, how about next summer?" Motorcycle. I had a what they call a crotch rocket, and I made it 19 miles in 11 minutes on July 4th. There's a roadblock. Spent 23 hours and 15 minutes in the county.
That had to be an experience.
The funnier part sometimes is maybe too much information. I borrowed my dad the money to bail me out, and then he didn't pay me back for 6 months because that was the pain of it.
Mm-hmm. What did you learn as a result of that changed you as an individual?
Probably one, there's multiple stories about this part. I don't really trust the justice system the way that I probably should. Didn't want to become an attorney and deal with that. That's probably one of the earlier parts of it. It's like, yes, an attorney is something like, well, it could be this, could be this, could be this, could be this. I'm like, let's give me black or white. Well, there's no black or white, but I don't want to deal with that.
50 Shades of Gray, buddy.
Right. Even today, it's like, I think we got to a post-modernist world enough that nobody can tell you what the truth is anymore, unless it's math, which I appreciate out of math.
Of course.
Real estate's kind of that way. Yeah. It's either going to be black or red or right in the middle, flat. So you could say it's like I like truth out of that.
Yeah.
Going to Dordt was necessary. A little more Western civilization classes, history that I appreciated a lot. Then I go to Drake.
So you leave Dordt, you get a license back, you flee. I flee the small Small town.
So actually, I was the chair of the college Republicans in Dorr College. Sophomore, we increased turnout there by 2,000 votes as Bushel 4, I think.
Okay.
And that was the county chair was like, you guys helped enough to be able to turn the state based on Iowa City and what other places were. So doing that, get that done. The day of the election, I'm like, I'd get my driver's license back in a week. I just had a professor call me a liar for quoting Fox News, which could be true. I don't know, but call me a liar for it. I'm done with this. I'm doing 18 graded hours and probably another 20, 30 hours doing that election stuff that day. And I'm like, it's time to bolt. And 3 weeks later, I was enrolled to Drake. Graduated there with economics and politics, double major. Worked for one more campaign and said, no more of this crap.
What year was that? What year did you graduate Drake?
2007.
Okay.
Graduate high school 3.
Graduate Drake. It's enough in the political front. And so?
Sophomore year. So my second semester sophomore year was when I started getting my real estate license.
It did come to fruition with your uncle.
It did. Yeah. Spring break. I didn't really know what the concept was. I was an older soul back then than I probably am today. Spring break, I did my 60-hour class online, walked out one morning from the coffee shop I was working at, small coffee shop, at 6 a.m. when the staff was walking out. And then I went and scheduled the test for my 7th or 8th exam week that year.
Isn't that what all college sophomores do?
Apparently. And passed the federal, missed the state by a question. So I came back down and did it the next month and passed it after I had time to study because I apparently put my Drake exams above the real estate exam. Mm-hmm. I don't know if that was always smart either, but I did it. He owned his own brokerage up there, had like 5 agents. I think he does about 10 million in sales now. He's always saying this is the last time he's going to renew, but then he gets bored. He works hard. He flips houses. When I was up there, we worked on a house that he ended up moving into at the end of that year. All my uncles on that side, they all come from a farming background. Like I worked the farm. He owns a farm up there. Either farms that are cash rented, depending on how busy or how much work he wants to do.
So that summer, you go to work for him?
I go to work for him, and then I went back the next summer.
What were you doing over the summer? What did that look like?
I showed some houses for him. It was probably before teens got real involved in real estate.
Yeah.
I think I technically put one contract together that summer. Following summer, I don't know what I did. I think he probably just put me to work harder. But I remember that one, being scared of the paperwork the first time through, right, not knowing what's going on. Sioux Falls area. He was south of there in Canton.
Okay.
I feel like I remember the first summer a lot more than the second summer. But it was a good mentorship learning experience per se. And then I come back for my senior year of college and I'm like, all right, I have an economics and politics major. I don't want to do the law thing. What the hell am I going to do with my life? It was 2007 going into 8 and the market's crashing, jobless, is going up. So I'm like, well, I got this real estate license. Let's go try it out. Yeah. I went interviewed. Do I name names? Right? I'm not gonna. I've had this conversation with him after that, after I got involved. But I went and interviewed a broker. He was 2 hours late. I'm in college. I'm sitting there waiting for him.
Buddy, I know you well enough to know you're not waiting 2 hours today.
Somebody wants to meet me at 3:30 today. Mm-hmm. He's like, I might be 30 minutes late. He's like, well, I'm leaving within 15. And he had a conversation like, and I just wanted to be a real estate assistant. But I'm in college. I want to be a real estate assistant. Sit down with him, wait 2 hours. He tells me like 4 minutes in, we don't hire assistants. We don't need any assistants. And I'm like, could you not have told me that before I wasted all that time?
Yeah.
And at the church I was going through at the time, I met a realtor and he brought me in to talk to their broker or manager. I'm sitting there talking to her. We talked for a while and she's like, okay, you're hired. So we get to the front door. I'm like, so which agent will I be assisting? And she's like, you're not. You're going to be a realtor. And I'm like, okay. Get wide-eyed, walked out. was a realtor and started working at it. I wanted a paycheck.
Right.
I didn't want commission.
Yeah.
And so I kept on doing that. I'd show up to the office there all the time. We're talking, that would have been summer of 06. I mean, fall of 06,
Okay.
a year before I graduated.
Okay. Yeah.
I didn't know anybody in town.
Sure.
I was not a good college student. I did not network with college students. I had a job at a coffee shop, which was the first W-2 job I ever had. I always worked farm for cash.
Yep.
And by the time it took me 3 months to get my first transaction in, I think I did 9 transactions that year.
Yeah.
I signed up for, I think, Realty Track for leads,
Yeah.
and it got me about 9 transactions. The next year, I did like 11. Finally out of college then. I did get a part-time job at a different place at that point in time for a hot minute. And then they had that $8,000 tax credit.
Yes.
And I sold 25 houses between January and June 30th.
Yeah.
And I thought that I knew everything.
I remember that year.
And I sold one house in November after that. I didn't carry listings. I didn't know how to get listings. And I went to the NAR convention that year.
Yeah.
And at the NAR convention, I ran into Walter Sanford, an old coach.
Oh, yeah.
And I hired him.
Okay.
And the next year, I actually learned how to sell real estate.
Still in the business.
I did.
Yeah.
At least I think I did.
Yeah.
We'll see. I'm still in it.
Still here.
Yeah.
Still doing it. It's interesting that you got in and, you navigated all that 08, the great financial crisis all the way through. And it seems to me like those who, you and I both know a lot of people who are exceptional at what they do today started in and around that era, and they just worked their way through it. And in order to thrive, you got to survive.
It's like we were both talking earlier, 2025 was a tougher year.
Sure.
And I think it reminisced a little bit of that, not near as deep.
Right.
But the sales velocity was pretty slow.
Yeah.
And we have a bigger population. Our MLS, a bigger geographical territory, more realtors involved. The numbers, and it's like the first time in years that you get agents call and say, "Hey, what do people think? What does think?" And like, I had one guy that keeps texting me. He's like, "Hey, you scheduled the show and you couldn't make it because this happened or that happened. The client couldn't happen." So he's asked me 10 times if we're rescheduling. And I'm like, "Dude, I'll let you know if I hear from them and they want to see it."
Right.
Because the market is slower and agents are needing more.
Yep.
Rates coming down will help. It's helping that they're coming down to where they are now.
They're coming down, and as we record this just today, President Trump put forward his nomination.
I saw that. I didn't get to read who it was or any details about it.
Walsh, I believe, is the name. And I read a few of the details, and the way gold and silver was trading. Silver, when I looked at it last, was down something like almost 15% today.
Really?
And that's because they believe the new Fed chair is going to do things are going to get substantially better, and relative to interest rates. Yeah, which time will tell. Right?
I will tell.
Yeah, but Trump, he's been transparent. He wants it to go one direction, and
Yeah.
if you get to choose who goes in there, I got to think that's his guy.
Yeah.
He's going to get it to go one direction.
Interesting.
So we'll see how the year plays out. I agree with you, though. If rates can make a move, the velocity will increase.
Yeah. That's what the real estate industry needs.
Yeah, it's been a slow, just the way the rates move so hard, so fast upward. And now you're, 25 felt like that to go. It just is.
It's like we complain about that. My dad filed bankruptcy 2 weeks after I was born, 1980s farm crash.
He was so pissed off at you.
He was a dairy farmer, farmed everything. Lost the interest rate. I think jumped to like 18% on the farm.
Yeah,
cost my grandpa money because he had co-signed on it. Was not a good situation for anybody.
Yeah, right. Yeah. So what we're dealing with now is child's play.
It should be, but nobody's used to it.
You're correct. Yeah.
And it's generations ago.
That's right.
At least a generation ago.
Right.
So, but I've been somewhat surprised how resilient the economy has been on some of the construction front. I've talked to 3 builders, I feel like, in the last week and a half, 2 weeks, and they're like, "Man, this is the year we've ever had." And I think the segregation of money to the high earners has gotten stronger and stronger, and they have more of it,
right?
And they still drive the economy. Like, I like listening to Elliot Eisenberg, and when he comes to town, very much just keep saying that, $250,000 earners are 50% of the economy, but only about, 5-10% of income people are individuals.
You didn't work this hard to earn next to nothing on your money. Savings accounts barely move the needle. Tech stocks, AI stocks, it kind of feels like Vegas out there right now. Rentals, too oftentimes it means tenants, toilets, termites, and not the cash flow you were thinking. Well, so I've got an alternative. Little Guy Loans Co-Lending Fund. Qualified accredited investors are earning 10 to 11% annual passive returns. It's paid quarterly by co-lending with us alongside me on short-term first lien real estate loans right here in the greater Des Moines area. Your money's backed by a real property, not promises, stays close to home. We've successfully funded well over $10 million in loans right here in central Iowa. So if you want steady income without headaches, click the link below in the show notes. Let's connect. We'll see if it's a fit for you.
Talk to me. You brokered for a long time. That's really the bread and butter of everything you've done. But at some point, you put a couple dollars in your pocket, and you're like, I got to employ this someplace.
Yeah.
So talk to me about your first step into investing in real estate.
I'm gonna go through that fairly quick until I do the one that was the riskiest.
Okay.
And then the second riskiest ones I probably just did.
Okay.
2014. One thing about being a broker, you get deals put in front of you. I was calling expireds, doing this and that. 6 condos in Plumwood Terrace up there on 86th Street. Lady owned them all. Wanted to sell them, couldn't sell them. Told me to buy them. I did the list presentation. Like, you buy them? How? I'm pretty fairly young at this point. One on contract from her. That's when I went into business with my dad. Quite frankly, he had, I think it was the first time I ever remember him ever having any money. But he had 90 grand, so we put 90 grand down as a down payment. Started our little LLC. While I was getting those filled, because there was one tenant in the 6, I think, filled those. Somebody called me to flip a house or flip a condo in there. Bought it, flipped it, made not a lot, maybe 15, 20 grand, but it was cash, and I used real estate commissions to pay for the improvements. And I took that and bought a flip on Rutland. I think it's Rutland. 50 grand, it's day after Thanksgiving, best November, December, best time I feel like to buy a property. 50 grand, put 20 into it. My employee rented it from me for a year, and he comes in and says, "Hey, Tim, neighbor wants to buy it." Like, what's it worth? I figured it'd be worth 80, 90, 100, hadn't paid enough attention. Yeah. He didn't market on it for me. 135. I'm like, I'll sell it for that. So we sold it, and I 1031'd it into a 5-plex, a duplex, and had a little cash left over that I used to flip a house. And one of the things when I was working for First Realty, I'm like, hey, you guys got all this new construction. I'm an agent, I'm producing. Give me some first new construction. The new agent manager comes in and says, you don't have a business model for it. You're too busy doing all this other stuff. Mm-hmm. And I'm like, 2 months later, I left. That's when I realized I didn't have a business model for them. They didn't have one for me, vice versa. My coach told me to go to Exit Realty, John Niemeyer's office, did that for 2 years and opened up my own. I like the exit model, but the investment side of it, when I 1031 into those buildings, I was like, I want new construction. How do I get to do a new construction? I like construction process. At this point, I'm going to say various versions of it.
Sure.
And I'm like, I could finance something. I could do this, I think. I had the Kirkwood downtown cross my desk. It came from, ever heard of National Council of Exchangers Group?
You told me this like 3 or 4 years ago, because I asked you how that Kirkwood came together.
Yeah.
So that was the first time and the last time I've ever heard the words.
So my franchise owner, or the guy that sells the franchise, regular camera franchisee, franchisors, get this stuff. He sent it to me, and it came across there. So a guy by the name of John Schutte, Chudy. My last name, Schutte. Yeah. My uncle that got me into real estate, John Schutte. he was partnered with the Capolas downtown on that building.
Yeah.
He was the managing partner. They were the non-managing partner. I guess 55-45 somehow. I can't remember. Anyway, so I look at it and I'm like, that seems expensive. That's a big jump from what I was thinking to what ended up being, I can't remember, it's $8 million plus or minus 5,000 or 10,000
Yeah.
or 50. But at that point, it's not the big deal. I started thinking through it, started, it's like, how do you finance this? How do you do X, Y, and Z? And I went and probably talked to 5-ish, 10-ish lenders. I had 3 to 4 of them that walked the building with me for sure. Bankers Trust, a guy from Omaha from Bankers Trust. I didn't know that they had somebody out there at that time who was talking to the owner, John, and took me a year. We structured the deal with us, my dad and I, getting a $5 million first mortgage, $1 million mortgage on this farm, and one of the sellers carried a $2 million second for the 54 apartments.
54 apartments. Yeah.
Not the commercial. Commercial was separate condos.
Oh, the first floor was totally separated.
Yep.
Condoed out.
Yep. So you have the condo regime, so you're going to control the common areas. Yep. So I set up the condo regime. I managed that until about 2 years ago, I think. But part of the bank financing that I got is I had to have 5 under contract before I could close. Lo and behold, we got that done December 21, 2015. I closed on that. As I'm sitting at the closing table, I think to myself, it's like, man, why do I have a little bit of deja vu right now? And I started to think, it's like when I was in high school, I went to the Capitol for a project. They brought us to Java Joe's downtown. I didn't like kids when I was a kid. I walked up the street and I looked into this lobby and I'm like, man, I want to own a lobby like this someday, which happened to be the Kirkwood. And I didn't, it's like kind of the power of affirmation, power of prayer, power of whatever that happened. And I was like, that project, it's like I had to get my family involved. My siblings all had to come look at it. I had to get them to approve and accept it because if I went under, so did my dad's farm.
You literally betting the farm.
I bet the farm.
Yeah.
There was an article done, business record, when I bought it. I had 32 conditions I had to get through for the bank for that $5 million. And I made a Excel spreadsheet. I could tap the keyboard and it would randomize which unit sold in the building to tell me where I was at. And I was like, I felt like I was at the casino gambling. So the headline was gambling on condos. I thought that was kind of funny.
Yeah.
That project took longer than I expected.
All right, what year, to bring back, when did you close on it?
December 21, 2015.
2015. Okay. And then just a point of clarification for the audience's sake, they don't know how your last name is spelled. You referenced a John Schutte. Yeah. Who same name as your uncle, but it's spelled differently.
Chudy was his last name.
So the seller has the same last name in pronunciation, not spelled the same, not your uncle. This is non-relative here on the seller side. Yeah. I thought that I just want to make that distinction.
And so like the first year we closed 14 units, second year we closed 16 units. So like that's 30 of the 54. Yeah. For some reason, like downtown 2008, 10, 12, 14, like I didn't really see many sales going on. I think like I was overly optimistic. I'm probably overly optimistic when I go into a lot of deals. And I don't think I'm alone on that, but I was hoping to be in and out of there in 2.5 years. I got my debt paid down pretty fast, pretty okay. Yeah. You know, the average sale price, what's the average sale price? About $180,000. Okay. First 2 years, sold 30 of them. So I had 24 left, total of 54. So my first mortgage was basically gone within those 2 years. And then we refinanced out the second or third mortgage. The one on the farm stayed there. But, you know, I still own the garage next door to that place. I have that up for sale if anybody wants to buy a parking structure.
There you go.
Redevelopment opportunity.
Right.
If it doesn't sell, I have plans for that. But it's easier to sell something and take cash than it is to go to redevelop yourself. Right. Particularly a smaller team that we have. But, you know, out of that building, out of the proceeds of that, we 1031'd a little bit into a 36-plex that we owned, 12-plex that we owned. And that's kind of where my dad and we haven't done much since that. Largely because I got married in that 2019. We got 3 young kids. My wife and I started flipping houses. We're kind of creating the same thing over.
Sure.
And then I got involved I did a land development in 2017 that probably didn't go as good as I would have liked it to.
Let's talk about that, and let's talk about the current land development.
Yeah.
Well, which one is the riskiest, or was the riskiest?
Which?
The land development, the 2017 or the most recent one?
The most recent one's a way bigger dollar amount.
Yeah.
But
that doesn't necessarily mean it's riskier.
No, it doesn't mean it's riskier. The one in 2017 was an infill 10 acres in an older part of Johnston.
Okay.
The risk factor there was the neighbors all hating me for what I was doing by far.
Me just simply meaning a developer, any developer, just insert person in this seat and it would have been the same.
That gave me battle scars. I'm not a violent person, but I do remember putting a hole in my wall after a city council meeting after that.
Walk me through that. What was challenging outside of the neighbors? What was challenging at the construction level? And then walk me through the neighbors. How did they make it even more challenging?
I'm going to start with the neighbors.
Okay.
One of the neighbors kept pulling the construction pins, the survey pins, said, I don't agree with these. These are wrong. She'd pull them, throw them, have to go resurvey it.
Gosh.
And somebody from the city met her out there, watched that, and showed her and proved to her with their own surveyor that they were correct. But she had been mowing into the property or had their trees planted on the property, and that was a big challenge. The next challenge was the other neighbor. Didn't pull the pins. I gave him a chunk of ground, 5 feet, 8 feet wide by 125 feet, because my ground was literally under his driveway, close to it.
Mm-hmm.
He goes and apparently he put some dirt on it. The city thought it was my dirt, and they told me they're going to pull my construction permit if I don't move that. Second time they told me that, I just jumped in my skid loader that I had there. It's size of probably about the pile of dirt was the size of a 6 foot, 7 foot folding table. Not any taller than that, maybe a little shorter than that. Took me 5 minutes. I moved it. 4 hours later, I had a call from the police department for trespassing on that ground that I have an easement for that I gave to this guy for moving his dirt. We had to go to court. It costs $3,000 to put that 4 buckets of dirt back because it was landscaping, nice black soil. I went to mediation for one of the neighbors probably 8 times, and we could never come to an agreement. The city helped fairly decent with that, or at least their appointed attorney. And those were those issues. The construction issue, I was young and dumb, so 20.
That helps.
20.
Because that is a lot to go through right there by itself.
2015, when I closed Kirkwood, I was 31 years old. So I was 32, 33. This is going on at the same time. I hadn't done land development, hadn't done the horizontal improvements. I hired an engineer that I think was okay. I liked the price, liked his design. I had the 2-3 of them look at design, and this was the best design, nicest lots. I thought most sellable lots. I did not try to rezone it. So I sometimes think I should have tried to rezone it to 60 foot instead of 75. It was already approved for 75. It would have taken more time. It may not have happened. The city was saying it wouldn't happen, but I wanted starter houses. And it's kind of going back to, I wanted to be in the construction industry. I wanted to build, I wanted listings somebody else built that I could list and, get commission income.
Right.
So I sold it on takedown schedule. My engineer did what I think he needed to, and the city would send it to their engineer. The city could not give me an answer how to fix anything. They would say, my engineer said this isn't good enough. So we're like, okay, what do you want to make it good enough? And we would be delayed for a month to 2 months on a question like that because they wouldn't give us an answer. And my engineer's like, I don't know what to do. So you have, the engineering was a big problem. Once construction started, it was a fair bit better, but I still didn't know enough. And I was using small, cheaper guys, which, knowing what I know now, I feel like I'd be more comfortable with, but I probably shouldn't have then. But the other part to it is like, all right, I got a bid for that development from one of the 2 biggest ones. They wanted to haul in about $300,000-$400,000 worth of dirt because they said we didn't have enough dirt. And the engineer's like, no, that's not right. You take the basements take the dirt out of the basements, and it's net zero. And I'm like, okay, fine. Funny enough, not funny. I'm not quite to 10 years. I need 10 years. There's been talk that I'm supposed to dig out some of the backyards of houses because there's too much dirt there.
Too much.
Still. So it's like, I think the biggest thing with land development is the type of risk is higher. Your consequences are higher, and you need to know more than how to pound a hammer, how to take out a wall, how to frame something.
Yeah.
So like going into the current development.
Before you go to the current development, tell me as it relates to the land development, would you say it's more art than science?
When I did the first one, I was still connected to enough of the political people that I used to hang around, and they'd be like, politicians are Pavlovian dogs. They know pleasure and pain. And then I was like, I should have sent them all $1,000 bill check for a little pleasure. Previous conversation, Lamar. We were talking about Lamar.
Yeah, we were offline having this conversation about Lamar Cote, and I was saying to Tim, he sat in that very seat that you're in, and we had a heck of a conversation there.
Lamar didn't take no for an answer.
Nope.
And I was a 32-year-old that didn't know enough, and I'm too much of a nice guy. Everybody tells me I'm too much of a nice guy, and I didn't put my foot down. And I figured out how to fix it to where they would okay it. I feel like I look at some of the other developers in town, and I see that they either one of them is an engineer and knows civil engineering and can battle the cities and their staff on how to interpret stuff. I don't always feel like I have the confidence to do that.
Current development, or I should say the most recent one.
Yeah. Close. So Northwest Ridgeview in Johnston. I bought it. I was hired as the realtor. We got accepted as the next year's home show site. A few days after that, the developer called me and said, Tim, buy this from me. I don't want to be involved in this. And it's like I've been working at it for a long time. It was 18 months in the making, I feel like, at that point.
Yeah.
And so I figured it out, got it done. But now it's like, all right, we have to get a home show going. We have a fair amount of intricacies. The lot prices are higher. We did not, like my previous one, I sold to two builders with lot takedown schedules at the beginning. The one builder took 2 years to build 6 houses, and they both started all at the same time. They had the bandwidth to do that. Didn't have the bandwidth to finish them.
So rough average price point of those, the first development that you did?
For $350 to $500.
$350 to $500, and that was a decade ago.
Basically.
Okay.
And I wanted starters homes.
You wouldn't lower than that.
I went lower than that.
Right.
That price seems like a steal today.
No doubt.
And those houses are selling for a little more than that now.
Yeah.
This development that I'm in, the lot prices are $190 to $375.
Right.
We're a little bit further out there, being off of 141 by Beer Creek. That's one of the negative things people talk about. The positive things, once you're there, the views are gorgeous. You're going to be able to see for miles either direction forever.
Right.
The way it looks. There's going to be a prairie down there that there's 115 acres below us off the ridge that is going to be a small, intricate, boutique town center type thing off of 141. So there's an interchange going in off of 141. They closed Towner off right after the home show. So off of 141, you can't come off of Towner Drive anymore, which we knew was going to happen.
Yeah. This
one causes me a lot less stress than the first one because I have 2 partners involved that actually know what they're doing, or they have their own bandwidth, and their bandwidth and our skill sets are all different. And it seems like it's working. It's going to work. We closed our 8th lot of the 16 here last week. I'm hoping to get another offering on another lot, gets rid of the bank debt, have some private placement debt after that. But this one, the city's working with us well. One of the weird parts about it is there's multiple government agencies involved in this, in my opinion.
Why?
DOT for the interchange off of 141.
Okay.
So that's state. They closed off Towner Drive. Polk County owns north of Towner Drive. Towner Drive's supposed to get ripped out. It's going to be the backyards of our north-facing lots on the extra land for phase 2 and 3, which they deed back to us for where the road was. Yeah. So we have to go through that process and figure out when that's happening, how that's happening, who's paying for it, et cetera, et cetera. And we have one of our best lots. We have to put a road through to get to the lift station that Johnston put in for it.
There's some uniqueness to it.
For sure.
If you're a house flipper, execute the burst strategy, or do double closings and are in need of money, Little Guy Loans is your go-to lender here in the Des Moines area. Time is money. Loan approvals in 24 hours. Closings in 5 days. Little Guy Loans was founded by Neil Timmins, an investor just like you. Since he has been in over 10,000 homes in Des Moines, there's never an appraisal. Houses, multifamily, and commercial property loans up to $1 million. Check out www.littleguyloans.com.
It's not, in both these scenarios you just laid out, both the developments, it's not like you just, mowed over 40 acres of cornfield. Just started going. I mean, there's moving pieces with all these. It makes it unique.
So somebody brought me a piece to look at, to invest in, that's 40 or 30 acre farm field.
Yeah.
And his infrastructure costs to put the street in were $72,000. And I'm like, for 8 lots. I'm like, I think we need to sit down and talk through this, because as a city, there's no engineering involved. Engineering is going to be $2,500, $3,500 a lot. Then you're going to have the underground piping that's going for storm sewer if you have it. Yeah. Is there stormwater retention? Is on and on and on and on.
Right.
And for the most part, I feel like most people say 35, 40,000 is the improvement cost per lot.
Per lot, yeah.
I haven't heard a new number for a while, but it could be 50. That's an old number to me.
Sure.
You got to acquire the land. You got to pay the interest on everything. And it's like, it's not that simple. It's not going to be.
No, it's a big boys and big girls game.
And I'm not quite there yet. It's like, in my humble opinion, sometimes.
You keep swinging. Why do you keep swinging? What about that end of the business attracts you so much to it?
I think you can make money at it. I've been a realtor for more than those 2 developments.
Yeah.
Selling that type of product is sometimes more fun and easier than going through home inspections. But at the same time, I think it's kind of just lined up for me for that, from that standpoint. I got to say this because it might fit in the family gene. When my dad was about 10 years old, his dad takes him to a law office to do sealed bids on 2 farms. And my dad's like, my grandpa put a bid on both. And my dad's like, what happened if you get both? It's like, we're not going to get both. We'll be lucky if we get one. Got both. Mm-hmm. Growing up, my dad has been saying, wish I had more brains and less balls. But it runs in the family, apparently. And it's like, a lot of the things that I end up doing are things that nobody else would touch. Huh. And I don't know that I can think through any differently, or if I'm more willing to take the risk or what. Kirkwood was one of those examples. That was a 4.5 cap when I bought it. The appraisal, the appraiser took my spreadsheet that I made and said, it's worth what he said. As condos, it's worth $2 million less than he's paying for it as apartment. $6 million as apartments, 10 as a condo. Paid 8. Wish I would have made all of that difference, but made a little bit in between there. Yeah. And I do, like when I buy stuff, I like to improve them, to improve rents, do value add. And I would probably do that too much from a value add standpoint, because I spend too much because I like nice stuff. And then I was like, everybody should have nice stuff. And that's not always the case.
Does knowing that about yourself, in order to combat that, does the land make it easier versus building a brand new construction, going down that path, for example?
It does a little bit, for sure. Well, the scary part to me with land is you don't get any income until you sell something. Mm-hmm. Like you can cash rent something, but cash rent's 3, 2, 1% return.
Immaterial when you're developing it.
Yeah. And that's what I feel like safe about residential or doing multifamily, or I have a little bit of commercial here and there. Yeah. What I think you don't have to deal with tenants with doing land development, but you have to deal with the government organizations and everything else that is also a headache.
Yeah.
Nothing's easy.
Choose your hard.
That's exactly right.
2026, outside of interest rates, what are you most excited about?
Getting past 2025. I was saying it's one of probably the hardest years I've had. We are just finishing up the 15th apartment that we own in one building. That's 24 units that we're selling. Actually, we're
the 15th remodel in the building.
Which, it's like what saying we do stuff too nicely.
Yeah,
we do get a decent price on the sale if we sell stuff. And like our flips, I feel like when we flip a house, we end up comes in quick, comes out.
Yes,
offer comes in.
Yeah.
I think we do a pretty good job of controlling pricing, even though we do like make stuff nice. And then it's just questions like, are your systems, processes to do this going to get it done in a timely manner? It's like I've had, I've taken 18 months to flip a house, but most of the time the ones that are successful, you're done in another in under 3.
Right.
I finished up a building this last year that I bought in 2017. I had an ego in 2017, and I did that land development.
Yeah.
And I bought this building thinking I was going to do historic tax credits to learn that. Kicked the tenants out shortly thereafter. It's a historic brick building in a small town about 40 minutes west, and forgot about it. Tax bill came and I'm like, oh crap, I do own that. And that happened once or twice. And luckily it was cheap. That's a smaller town, so it was cheap enough.
Yeah. And
what I ended up doing, like I got through that we ended up doing a upper story housing grant on that. So they have upper floor apartments look great.
Yeah.
But I couldn't tuck point the lower half of the building. I couldn't put windows in the front of it. They're all wooded over. Going back to what I'm excited about 26, that project's done. Or it's just not a noose around my neck that I have to forget about. Getting done with my 24-plex, that was a lot of expense. I was talking to the contractors like, yeah, Tim, I'd rather flip a house and you make 20, 30, 40 grand instead of me doing this and getting $1,200, $1,100 for rent.
Yeah.
And we've gotten through, I think, the hardest part of that development. So with that development, we have activity out there. I want to start the second phase of that. There's not profit in really the first phase of development, it seems like.
Yep.
And because we had to bring the sewer an extra, I want to say quarter mile to get to that site. And then phase 2, it's already in.
It's there. Yeah.
The underground's already in there. So I'm excited for the next few years. It felt like last year was very similar to 2015 when I was trying to close Kirkwood. I talked to more banks and bankers and lenders last year to do what I did in helping get financing for the land, for houses and whatever else than I've done in that decade.
Well, I'm hoping 2026 looks a lot like 2016 then.
16, 17, 18, they were all good.
Yes, they were real good years.
19 felt good. COVID with 20 was weird.
Yeah, right.
20, it's like last year this time, December, January, February, it felt like. I thought I had a great month of sales, and then it just like stopped. And this year I was talking with a builder, and I'm like, this feels great. I just hope it's not the same as last year, where it stops after a certain time.
Sure. Yeah.
And last year was, if I remember right, Trump just got inaugurated, and 2 months later, tariffs went in, and felt like it stopped.
Correct.
And so then, what could he do this year that could do the same? It seems like there's a few things on the docket.
No doubt. Yeah. Yes. So we're going to have to see how it plays out and see what that does for rates.
Here. Yeah. Rates, market, what people are scared of, etc.
Yeah. Tim, you ready for the final 3 questions?
Sure.
If you had one piece of advice for your 20-year-old self, what would it be?
28-year-old self.
20-year-old
self.
Yep.
I think that one's pretty easy if I can spell it out. Control costs better and don't spend money foolishly. Mm-hmm. I've had a few deals that weren't great. I've had some that were great. But I think overall, I don't live really lavishly, but I've wasted money on sexy real estate stuff.
Give me one example.
I spent money on Zillow for years.
Okay. Yeah. Inside the business. Yeah.
Lead gen stuff.
Yeah.
It's like waste.
Yeah. 2 books that changed your life.
2 books that changed my life. Atlas Shrugged.
Yeah.
I'm not going to say the Bible because that should be a given. Atlas Shrugged. What would be the other one? Darren Hardy Compound Effect.
If you were cast away on an island for a year, you can only get 3 pieces of data about your real estate investment business each month. What 3 things must you know every month to know how your business is running?
I'm going to take that to property management to be able to manage look at what I own to maintain, rent roll, delinquency, and probably maintenance.
Maintenance requests, costs, expenses going on with maintenance side. Okay. Tim, I've asked lots of questions. What's one question I did not ask that I should have asked?
Where do you do it?
Yeah, I kind of almost asked you that before we came on, and that was the implication of 5 to 10 years from now, what's it look like? Where are you going? So yeah, at its core, I know you've got 3 kids, 5 and under, but you were doing this long before they came around.
Yeah. I think, and like before being married and having kids, like what did you have?
Yes,
and it's like you have the thrill of the deal, the thrill of structuring it, stuff like that. As you get older, you get more jaded, having to deal with stuff that's obnoxious, and you have less patience for it. And I think you have less patience for it because you have less time because you want to spend time with the wife and kids.
That's right. The priorities.
Yeah. I feel like a long time ago you had mentioned something similar. And the thrill of the deal is still fun. I think I could have been a lot wealthier if I didn't have done some of those stupid things in the past.
Sure.
But the thrill of the deal is, I think, why you do it instead of the money. The money's what comes after.
Does the deal size impact that thrill? Meaning, do you still get a thrill selling a house for $300,000 like you used to?
No.
Yeah, right.
So do you know a funny thing? I can stop after this. One of the deals that I did came with 6,000 square foot warehouse space. I have a long-term tenant in it. Great. It came with a little lot down 2 blocks away, close to where Habitat owned. And a year and a half or a year after I bought that, they finally got the title cleared and transferred it to my name. And I'm like, got the tax bill for some crap. I remember this was going to come. I just forgot and hoped they did.
Yeah.
Probably paid tax on it for a year and a half, 2 years, 3 years maybe. Listed it this week. Rick Madden calls me. You got a slice of heaven. Listed it for $10,000.
Yeah.
City said it's not. City, they're like, probably not buildable. I'm like, I'm not dealing with it. It's 4,600 square feet. Rick and I on the phone came up in a minute what he'd be willing to give it to me, pay me for it. I'm like, it's kind of a fun little deal. I ain't getting $10,000 out of it, but I like Rick, and it makes it easy, and he makes it easy, so it makes a fun deal.
I've done the same thing with Rick. Yes, I'm in agreement with that.
Yeah.
From a tiny little sub $10,000 lot all the way up to multi-billion dollars in developments here.
It's just a number.
That's true.
It's just a number. I do remember when I doing the Kirkwood, they were always asking me, how's your stress level? Are you sleeping at night?
Yeah.
And I'd be like, why wouldn't I be sleeping? I was like, I think people could go in that far. It'd be like, either don't sleep or sleep all the time.
No.
Well, I'm like, it's just a number.
Well, you've been able to internalize it and navigate it.
Did. We did. We navigated it.
Are you sleeping? How are you sleeping now? You've got a large development out there with big houses and big numbers. But maybe you'd prefer to be at that end of the buyer pool than the starter houses buyer pool.
I think at the end of the day, I come to the conclusion that the good Lord's protected me and done really well for me on that front in terms of keep teaching me lessons with stupid tricks, stupid things, stupid properties, motorcycles, and trust in its hands. We'll navigate it, do what we can, but if he takes it, he takes it. If he don't, he don't.
So we're going to leave it there. I appreciate you being here. For people they want to find you, follow you, connect with you, where can they go? What should they do?
Facebook, Instagram, website. I'm not on them all that often, but you can. My phone number's 515-991-4204 or Timothy@soldesmoines.com, all spelled out.
Perfect. I hope people on the show notes. Appreciate you being here, Tim.
Okay. Thank you much.
Thanks for listening. If you're enjoying the show, may I ask a favor of you? Naturally, subscribe so you never miss an episode. But would you rate and leave an honest written review on Apple Podcasts? It does a lot for us here at the show, and I appreciate reading your thoughts. Great guests make for a great show. If you know of another Iowan who would be a great guest, or you yourself have interest in being a guest, well, get on our radar. Visit Investing in Iowa to fill out an application or recommend a guest. And if you want to connect with me one-on-one, go to LegacyImpactInvestors.com. Click on the Invest With Us button in the top right corner, and there you can pick a time for the two of us to get on the calendar and connect. Until next time, keep investing in Iowa.